حضورنا الكريم نرحب من جديد بالسيد أندرو كريتشلو.
Ladies and gentlemen, please welcome back to the stage Mr. Andrew Critchlow.
Ladies and gentlemen, thank you very much for your time coming back into the room. Getting towards the end of the day, and we're now going to tackle the subject of can innovation coexist with stability in finance. Now, post 2007, 2008, the global financial crisis, I guess innovation in finance, what could be called, in some people would say, risky finance, has got a bit of a bad rap. Did it cause the financial crisis? Did we take too many risks? Was packaging debt up in very complex and grey financial instruments? Was that the root cause of all the economic chaos, which indeed, we're still coping with today across the world? Interest rates are still pretty much at rock bottom lows. We have very little inflation, price growth. It's very difficult for banks, financial institutions to make money. We have an awful lot of regulation. Anyone who's worked in banking will tell you it's much more difficult now to provide finance, to provide the kind of capital that you, investors, and people actively working in economies need in the Middle East for projects and infrastructure and to do your business. I'm delighted to say that we've got an absolute first-class expert panel here, and I'd just like to very quickly introduce them, starting on my left. Ambassador for Fraker, Chairman, Merril, Lynch, Saudi Arabia. Mr. Charles Prideaux, Head of Institutional Business for Europe, the Middle East and Africa at BlackRock. Mr. Sammy Kayello, Chairman and CEO of MENA for Morgan Stanley. Jassim Seddiqi, CEO of Abu Dhabi Financial Group. And finally, at the end there, Mr. Fahd Saif, General Manager of Global Banking and Markets at SABB. Now, to start, I don't mind saying I'm a little bit of a skeptic about financial innovation, especially in a region like the Middle East, where previously there's been no shortage of capital, but I'm here to be convinced otherwise. And I know, Fahd, you're of the view that it's a good thing and we need more of it here in the region. Why?
Assalamu alaikum wa rahmatullah, masakan bil khair, and good evening everybody. Yes, indeed, the introduction you put into the international markets and developed markets, that they are becoming very concerned about financial innovation. I don't think it applies if we want to localize that into Saudi or in the region. Today's circumstances and today innovative type of approaching the new economy, if I would like to classify it that way, that definitely we do require in Saudi a lot of financial innovation to create more deep markets, more efficient markets, and more distribution of the risk, and to interconnect the sectors and the chain within the sectors. We're all aware that any sector do have investments into innovation. Manufacturing do have innovations R&D. The telecommunication do have innovations R&D. Why not financial sector also have innovations into and spend into innovation? More precisely, in the government, in a country like Saudi Arabia, I think it's an optimal and vital that market participants, stakeholders, supervisors do encourage financial innovation up to a certain extent, where it is controlled and not taking advantage or arbitraging regulations or mis-selling.
But with the Saudi banking industry, the banks here are well capitalized. They don't carry the same financial constraints as, say, some of the European international banks. Why bother taking the risk?
Well, also the Saudi context, there are constraints on the local banks with risk-weighting assets and capital charges, and also the duration of the financing that you can participate in. But in Saudi, as we all know, that there are many privatization and also project finance requirements. So you need to create that financing layers into the economy itself, and to make sure that a lot of participants could participate. I always argue with colleagues and peer group, why do investing abroad out of Saudi, where in Saudi you could find a double-digit yields into infrastructure projects that you could participate in, and you could also envisage financing semi-government or governmental projects and you could also distribute and influence saving mentality into this economy.
Sammy, if I can come to you, I mean, you work for a big, powerful Wall Street bank. Some would say, part of that system that we talked about earlier, that created a lot of risk, and that all came crashing down 2008, 2009. I mean, some people would blame the industry. How do you get over that? How do you convince people that innovation can really be a solution and provide more capital in difficult times?
I don't think innovation was the reason that we got into a bad place. The governance at the investor level, at the distributor level, was not robust enough, where the risk measures and so forth, and the ability to look through the complex toxic assets that were on balance sheets and were highly leveraged, were at the level necessary in order to avoid the risks. The severe conditions that came in 08 to 09, what they precipitated is better supervision, better governance. Boards now are accountable. The board members understand the risks of the companies that they oversee. And as a result, we are in a better place today, infinitely better than we were 10 years ago.
Does that make you more keener to come here to the region because there's potentially more business here, there's more ways that you can innovate?
Yes, I think there's a huge opportunity in Saudi Arabia. Saudi Arabia is really, when you have low oil prices, then your sources of funding have to change a little bit. You have to look for alternative sources of funding. In order to do that, you need to open up your markets, you need to deepen the liquidity, diversify the deposit base, diversify the investor base. And to do those things, I think you need to innovate in order to attract both domestic and international investors. And there are examples both in Saudi. Saudi's already on track with that, and regionally, where some markets have done the same and have benefited immensely from this new wave of money that comes in from around the world.
Charles, I mean, BlackRock, huge asset manager, but here in Saudi, I mean, the market opened up recently to international investors, but it's had a bit of a false start. Why is that?
Well, I think as clearly there have been the uncertainty to do with the oil price and uncertainty associated with the geopolitical climate. I think in the medium term, what the Saudi market has going for it is a diversified sectoral base, relatively good liquidity compared certainly with some other emerging markets, and from what I understand, very good governance intent in terms of the regulatory environment and delivery of transparency, which is what international investors crave. So yes, there are some issues right now which may be deterring the international investor, but from the construct of the market itself, there are a lot of medium-term positives.
Ambassador Fraker, when you're talking to your board, Bank of America Merrill Lynch, and you're making the investment case in Saudi Arabia to them, I mean, what do you say given those points? Heightened geopolitical risk here, falling oil price, and you're well positioned to judge it historically.
So, echoing some of the comments that have been made, this is an environment where banks have a real opportunity to add value to the market in general. And I don't look at this market so much as a market that needs innovation, but as a market that needs development. There are many aspects of this market that are relatively new, so that's an opportunity to grow, and that's really the case, I think, that resonates back in head offices, that this is a young, new market with enormous potential and opportunity, and now is the time to be making a stake in the market.
Jassim, as a regional investor here in the GCC, but also taking capital overseas, some major real estate investments in London, good examples. I mean, some people would say that's quite risky at the moment with Brexit and all the geopolitical risk in the European Union at the moment. I mean, how do you feel innovation can play a part in boosting capital markets and funding markets here in the region?
I think capital markets in the region are extremely undervalued Let's not forget that capital markets in the region are 20, 30 years old compared to more than 100 years old in the US, for example. I think this is an opportunity. There is huge arbitrage, dislocation, inefficiencies in capital markets that can be useful for smart investors. For us, it's true that we invest capital all over the world in an opportunistic sense. We are geography agnostic. Having said that, today the best opportunity for us, what we see today, risk reward is really in the region. It's true that a lot of the markets in the region lack transparency. They're still not up to par with developed markets. Nevertheless, the risk and reward is so compelling at this moment that the opportunity is really in the capital markets here today.
I mean, part of that surely at the moment is currency risk. I mean, low oil prices are putting huge pressure on governments across the region. That's happening here in Saudi Arabia. Sammy has said, pretty firmly that there is no debate over whether the rial should be depegged from the US dollar. I'm not so sure. You look at examples like Australia, which is a resource-based economy, very similar in some ways to Saudi Arabia, and they have a free-floating currency that's worked quite well for them. You differ on this point, Fahd. Why do you think Saudi Arabia should keep a pegged currency?
I mean, as you mentioned, Sammy have came twice in the last 6 months reaffirming their policy on retaining the PIG policy between the Saudi and the dollar. And just mentioned by the gentleman over here, the QFIA initiative. You just announced the QFIA initiative, qualified investors to come into Saudi. So definitely you want to create more confidence into this economy and the system that it will continue to become stable. Imagine right now, qualified investors are just sharpening their pens to come into Saudi, fishing for an opportunity, as Jassim mentioned, and they would be suffering with how would this peg, depeg philosophy would come into the equation. I think it's absolutely, and I'm a believer that peg will be retained, and I don't believe that any change into that policy will serve the stability and will retain low volatility in the system, which is required at the moment.
I'd like to kind of throw that question out to the room here, and if we could maybe have just a show of hands. I mean, who in the room thinks in the current oil price environment that having the flexibility of a free-floating currency would actually help Saudi Arabia at the moment? I mean, can I have a show of hands? Probably maybe in isolation there. And who thinks it wouldn't? So, yeah, it seems people are pretty firm on where we stand with that. That said, I mean, the previous speaker, we were talking about blockchain. Some people would argue that currencies have become an irrelevancy or are becoming irrelevant anyway, and that's certainly part and parcel of financial innovation now. You talk to a lot of bankers on Wall Street, and that's where they say the financial services industry is going. Do you think that's a little bit too early for Saudi Arabia, too early for the region? I mean, Sammy,
just to get back to the point of the peg, one thing we see at Morgan Stanley that international investors are attracted to Saudi. One of the reasons is that you get attractive return, as Jassim was saying, but at the same time you don't have the currency risk if you're dollar denominated. And that's a very, very important thing, because if you're able to capture 5, 6, 7% return and lose it on the currency exchange because of volatility in the exchange, then you're going to think twice about investing in that market. So although the peg today may be under pressure, it does offer a lot of attractive trades for international investors to come in. As far as the Bitcoin and so on, my view is that it's a very compelling technology. It may have a place, it may come, but as has already been stated, Saudi is developing slowly but methodically and very thoughtfully towards an end solution. I don't see that happening really in the short term, but I do think that it ultimately may have a place, but I'm not sure where it comes in.
Jassim, do you see a place for blockchain technology somewhere in the GCC at some stage?
I think we will not have a choice whether we want to adopt this or not. I think the financial services industry is going to be disrupted by blockchain technology whether in the next 3 years or 10 years, time will tell. A lot of the bulge bracket banks in the developed world are already investing and researching in this technology seriously and significantly. Whether the region is ready or not, we will be forced to adapt to this new system that is going to disrupt the financial services industry. Disruptions usually do not happen at a projected time per se. They happen all of a sudden. The information technology disruption that has happened over the past 6-7 years was not thought of to happen. They happened suddenly. And I think we need to be very serious about the next thing in financial services, because the status quo is not compatible with the way the technology has revolutionized the way we live today. The banking system has been there for a very long time and it hasn't evolved really. A very good example is if there is a deal to be made, the commercial parties agree on a deal, the buying and the selling, but the transaction completes, after 2 days, after 1 month, after 3 months. This inefficiency in the system eventually is going to go away, and this is what the technology like blockchain is looking to replace. So I really think that it is not a luxury to choose to adapt to innovation. You will be dragged into it, so you might as well be prepared for it.
Chelsea?
Yeah, I agree wholeheartedly with that. I think if in England we reference an old king called King Canute, as you may know, trying to hold back the tide. You cannot hold back the tide of technology disruption. And from an asset management point of view at BlackRock, we are very alive to this, both in terms of the way in which we conduct research today, in terms of using data mining techniques. That, if you like, is innovation in financial services that we could only fantasize about 5 years ago, right the way through to evolution of the settlement process, which through time we would hope, therefore, to deliver better end value for our clients. So we are very interested in terms of more and better and more efficient ways to enable execution. And technology is going to play its part in that. And I think if we're in denial about that, then we would be wrong.
I'm reminded of a comment that one of my banker friends said when he said that banking, technology, and sharks have a lot in common, and that is that if they don't all keep moving, they die. And I think what we're hearing here is recognition of the fact that the financial markets historically have always been innovative, and new ideas are constantly coming up, and the banks have to adapt to that. And I think the fact that banks are still around proves that we do that.
I think
it's necessary.
I think the point here is that the way technology is evolving is we've got accustomed to how technology, the internet if you like, has facilitated access to things. And what we're now talking about specifically in relation to financial services, but potentially it will apply to other services as well in due course, is how the technology revolution is affecting the way in which services can be consumed. And that's the new thing.
And what type of services are these specifically?
Well, you've seen it already in terms of what's referred to as the Uberization of different sectors. So take the hotel trade now, which is being massively disrupted by Airbnb, or the taxi trade itself, which has been disrupted by Uber. And I think what we're talking about here is how data and the accessibility thereof is potentially now going to be disruptive in terms of the ways that some aspects of financial services are conducted.
Are you starting to see that in Saudi Arabia, Fahd? I mean, it's not just here in Saudi, but in the wider GCC. I mean, banking at a retail level has traditionally been very branch focused, and of course, in Europe, banks can't shut down branches quick enough because their margins are so tight. I mean, to what extent is I'm trying to find my mobile phone. To what extent is the mobile phone the new bank branch, and is that being taken up by Saudi banks?
Very, very much evident. I mean, most of us are mobile users. Most of us do require this technology. Most of us want the convenience service. I could bet with the audience over here that anybody have visited their branch more than 3 times for the past year. I have not visited the branch for the past 3 years. And all of, I mean, the technology in Saudi banking have reached to a very high level where I think it is very compared to developed markets, and maybe beyond that. Because of the usage of mobile phones and technologies is very much required. And today you could execute any transaction through your bank account in 30 seconds. Not only that, the government have also rolled out this digital strategy. Today you could renew your license, your passport, your identification card through using the digital platform, and you can also pay it through your banking account. So definitely that will be rolled out through also investments and financial innovation when it comes to finance innovation itself, i.e. brokerage or stock trading or mutual funds.
Jassim, you know, from your perspective at Abu Dhabi Financial Group, is fintech something that you're looking to invest in?
Absolutely. So at ADFG, we have a technology initiative. So we are an incubator. We have a VC investment arm, and fintech, if you think about it, is the only thing that has lagged the Uber-like companies and so forth. This is the only sector, not the only sector, but one of the few sectors which is waiting to be disrupted, and it's just a matter of time. So we are definitely ready for that.
Sammy, if I could come to you, I mean, you know, putting Saudi Aramco and the much talked about advisory contract for Saudi Aramco's IPO to one side, you know, what are the big deals and innovative finance deals that you see on the horizon over the next 12 to 24 months here in Saudi Arabia?
Well, it's been reported in the press and the media by the various government entities that there will be a privatization program over the next 2 to 3 years. There will be IPOs coming at the government level, and that will be transparent in nature throughout the entire process of the IPO in order to set an example of how the private sector can get IPO'd and so on. The CMA and the Saudi Stock Exchange are working hand in hand, communicating that and setting the stage for that. They're consulting, they're very close to the financial markets, to people like ourselves, consultants, investors, and trying to understand what is required and what the aspirations of investors are and so forth. I think everybody's getting ready for that, and the way that I think the Saudi government entities, the regulators and otherwise, the framework they're putting in place is the type of work you want to do where you're close to both the lenders and borrowers to understand what's required so that you can at least assure yourself of good performance of those IPOs when they come to market. I'll cite one example. In the UAE, in the fall of 2014, when our Mall Group came to the market, at the beginning there was the expectation from the investors was that it was going to be London listed. But by working very closely with ESCA and the Dubai financial market, it ended up listing in Dubai. The subscription in the institutional tranche was 30 times what was expected at the higher level of the range, of the price range, was 20 times for retail, and it traded up. It rallied from where it came, 2 dirham 90 to 3 dirham 50. Despite profit taking and deleveraging, it remained up. And that's a prime example of how a regulator can adjust and work with all the parties that are trying to come to market to ensure a smooth process that's successful and sets the stage for other IPOs to come to market.
Do you think the danger, though, with the privatization plan that is being mapped out at the moment is everyone's got Saudi Aramco in the back of their mind now, and there is only so much capital available that will be employed in a given market, and everyone's thinking, well, if we're going to allocate to Saudi Arabia, we're going to allocate to Aramco, where there may be other opportunities, but actually, in terms of shareholder returns, would generate more value.
I think, frankly, the hype that came from the press side and far more from what was initially announced. What was announced is that we're looking to privatize some of the companies. We're looking to bring governance to certain companies and so forth. And this is a program that will take time and will happen over the next 2 to 3 years. The expectation is that ultimately those companies that are so big can benefit from being privatized because they bring governance, they bring strategic ties with international companies and regional companies. There's wealth distribution that takes place. It lends depth to the equity markets and liquidity and so on. And I think there is a bit of hype at the time being, but it's subsiding. And questions now are being asked, the proper questions, and they're being answered. And if you listen to what was mentioned this morning, and I'm sure there'll be more of it, it'll become clearer as to what exactly is the target of being privatized, let's say at Aramco or other companies, and then the solutions will be more sort of tailor-made for that situation.
Ambassador?
Yeah, I absolutely agree with that. I think there was an enormous amount of hype surrounding that initial announcement. And I think the point is that a potential Aramco privatization is an example of the fact that there are assets inside the kingdom that could be privatized very effectively, and there are many parts of Aramco that could be privatized as well. But I think this also makes the point that I commented on earlier, which is this is an enormously exciting time to be a banker in Saudi Arabia. The prospects of government privatization, but private IPOs, the need to address a challenging financial scenario by looking to alternative financing products makes the job of a banker today, I think, very interesting.
I'd like to throw the conversation open to the audience here. I mean, do we have any questions? This gentleman over here, please. If you could also just give your name and title, that would be great.
Okay, my name is Talal Zaid. I'm with the Royal Court as an economist. I have three questions. The first question, whoever wants to answer it. So what do you think of changing the exchange rate of Riyal to encourage foreign investors? As you know, when you exchange, when the currency depreciates, you're going to encourage foreign investors. And the other two questions are for Mr. Saif. What do you think of giving the foreign banks to operate freely on Saudi Arabia? And what do you think about the idea of putting financial hub in Saudi Arabia and Mecca, for example, to be, for Islamic world, to be the financial hub for the Islamic world?
I guess you should take the first one, Fahd, maybe. I mean, we kind of addressed the currency issue, but it does seem that there is still...
Sure. Again, on the currency side, again, just to re-explain, maybe devaluation will make your currency cheaper. However, if people put their investments over here and they have taken a position, they would ultimately like either your currency to revalue or to become stable. Obviously, as the gentleman mentioned, you don't want to project to make X while the devaluation take the Y, and then you end up by X minus Y. So yeah, definitely again, having a stable currency regime, which is the peg that we have at the moment, is definitely advisable, and hence also to be retained and to continue on it. Can you remind me of the second question?
The second question was about the foreign banks to operate freely.
Oh yeah, okay. I think it's not about how many banks we have or the sizes of the banks we have. I think the challenge we're going to face on financial innovation is the set of talents, intellectual capital. As much as bankers, as much as investment bankers, as much as legal counsels, as much as auditors, and as much as regulators, they understand the challenges and make sure they sit around this round table discussing exactly what are the challenges and how could we envisage through the challenges and how can we innovate or put a structure that innovation could come with stability. That's, I think, the main challenge in Saudi that we're going to face. Yes, there are many opportunities, Aramco IPO, the headlines of aviation, logistics, healthcare, education. All of that have to manifest a proper way of envisaging how to convey the risk from a party to another party and how to include as much as stakeholders to diversify the investment opportunity here in Saudi. I think that's the challenge we should overcome in the coming 5 years. Previously, the government used to finance all of these projects. I think at the moment, it is very, very much advisable for these semi-governmental institutions or institutions who have the mandate of infrastructure to start become financially independent. But at the same time, they're waiting for practitioners to come up with ideas that could be manifested on the local terms.
I mean, and this idea that was put forward there as well about Islamic finance and whether there could be an Islamic finance hub.
Again, I'm a very fan of Saudi sponsoring, becoming the regional hub of investments. I think we are very well equipped, economical-wise, wealth, capital, institutional, regulation. I see no reason why Saudi not becoming the hub of a financial center within the region, or MENA in general.
Mr. Gentleman here, if you have the microphone, please.
Yeah, my name is Ihsan. My question is now the transformation program, the national transformation program is announced. Do we have in the commercial as well as investment banking the capacity to undertake that? Because we have very limited time with, you have to grow like maybe like number of folds of capacity, the regular capacity in order to take care of all the transactions and the growth. Thank you.
I mean, do you think that the Saudi banking system at the moment internally has enough capital capacity to be able to
I would like to go to an example happened with civil aviation in 2012 and 13, where the government wanted to finance King Khalid Airport and also King Abdulaziz Airport, and both projects were worth 30 billion riyal. And there was an idea that was envisaged through many stakeholders within the system, GACA obviously, Minister of Finance, and there was a committee, and we were thinking of how could we include the financial participants other than the bank community to participate on infrastructure mandate or transaction. To cut it short, we put a structure where it is GACA risk, but we do have government guarantee. And the transaction was 15 billion riyal. And remember the participation from across all segments, from institutional to retail. We have reached to 50 billion riyal worth of participation into that transaction. So the appetite is there. Maybe today there is a bit of a short of liquidity, and I agree with you, Dr. Hassan, is the challenge how much and how quick you can put all of these structures into a transactable transaction where you could convince all of the stakeholders to put the right disclosures and the right manifest or the right way to place it with sophisticated investors. Maybe time is challenged, but I think it's never too late to put as much as ideas in front of those decision makers to pursue other than governmental funding.
I have a question on coming back to project finance. I mean, traditionally, a lot of the finance market in the Gulf has been around large infrastructure projects. You know, whether that's some of the major industrial cities that companies like SABB have been behind here in Saudi Arabia, or other infrastructure such as power plants, water desalination, etc. That's traditionally been done by a club of syndicated banks. Do you think that model is now broken? Is there a better way to actually do that in Saudi Arabia? I mean, I guess I'd put that question first to you, Sammy.
I mean, we don't do project finance, but we can see many other solutions around how these, how to fund such enterprises and such projects. There's a lot of international money that's looking to participate strategically on a long-term basis or medium to long-term basis with entities. You mentioned SABB, especially entities of such. And the solutions in the financial field are such that the cost of executing on those projects can be much more attractive than the model you mentioned. And we've seen them happen elsewhere. I have every confidence that that will happen.
I think traditionally also the government has played a key role in the major project financing activities, particularly revolving around the big industries and the big companies. And the banks traditionally have not done much project financing. The banks The traditional commercial banks in Saudi Arabia have been short-term lenders, letters of credit, trade finance, this sort of thing. So there's certainly room in the local market for more project financing work to be done by the local banks, and I think you'll see that. A lot of it has to do with how I believe SAMA wants to manage the balance sheets of the commercial banks, the large commercial banks, and I know as a lending banker in the kingdom, certainly in the past, the commercial banks have not played a big project financing role, so that's there for them to do.
Maybe it's a point of emphasis, just to provide a bit of global context briefly. As you know, in Europe and in the US, we're living in an era of very compressed yields and on government bond markets, and then what that's doing is causing long-term suppliers of capital, like pension funds, for example, and endowments, to rethink where they can get the sources of return that they require to deliver on their end member needs. And so infrastructure is very much on everybody's lips. And so increasingly there's a role for asset management to play a role, which may traditionally be the domain of banks and project financiers, to facilitate essentially the connection between the demand for long-term capital and the natural supply of long-term capital. And then it's just like, in a sense, any other investment, as long as it's got good governance, a transparent set of kind of guidelines within which it's framed, and a return profile that's very visible into the medium term, which of course many infrastructure assets have exactly that, then it can be very attractive. And in surveys that we've done recently of our global client base, the level of interest in this form of diversifying investment is very high.
If you allow me, I just want to add into that. One of the challenges we face over here with the investor community or the financing community, not precisely the banks, but more of the asset managers and also the family houses and also retail who want to participate on such long-term investments. The definition of medium-term investment in Saudi is 3 months. So we do have a challenge on persuading investors that saving mentality and medium-term investments are vital. However, if you want to persuade that type of segment to participate on infrastructure mandates or infrastructure financing, I think, as several other developed economies have also applied it, put a kicker into that. Participate in a bond that will convert into equity, and that asset will be one day listed. This is a way to persuade more of a saving mentality as well, and also to grab type of investors who want to put their money into long-term or medium-term saving.
Is the regulatory environment in place in Saudi Arabia to do that?
It do, but again, the challenge is how much we can manifest as practitioners to the governmental institution that this could be a way of source of financing. And again, as Dr. Hassan had mentioned, time is key at the moment, so we're pressured by time.
We have another question from the floor over here, please, if you can take this.
Hello, my name is Mazen Al-Shanbari. In today's sharing economy, how do you see peer-to-peer lending platform and the crowdfunding platform affecting the financial markets? And do you think the existing financial system will embrace it or will fight it?
Peer-to-peer lending, who wants to take that?
I think what we have seen in the past 5 years is an emergence of microfinance and peer-to-peer lending, crowdfunding, as you have put it. This is something that's gonna evolve and it's gonna grow exponentially. Now, the big financial institutions will have to, at the end, embrace it because it will be a very important participant in the lending. Coupled with the evolution or the disruption of the financial services industry with blockchain and others, I think we cannot really imagine how the financial services landscape and the lending landscape is going to look like in the next 5 years.
We have another question just down here. If I could get a microphone.
Shukri Bundakri. Actually, I'm drawn to Ambassador Fraker's comment, which I feel had a lot of depth with regard to development and not innovation. I mean, you have to ask, what are we trying to fix? With regard to the financial system and the banking system, we've got so many big elephants. We've got a dismal banking record with lending to SMEs. We've got a problem with financial inclusion. We've got a problem with financial literacy. We have an excessive currency float in the marketplace. So, I mean, the question really becomes is, can stability and finance coexist with innovation? As long as the innovation is geared towards, tap dancing. Because at the end of the day, and this is the conclusion of my comment to support my question, is who is it actually safeguarding and who is it actually benefiting when we're talking about it, when the populace is not getting the best out of a financial system.
Yeah, so to elaborate on what I said, in many of the markets in the Middle East, they're new markets, they're new financial markets. There's a long way to go in these markets to get some of the basic services that I think you're talking about. People aren't seeing. There's a big education element to this, financial education. People need to understand what is available from the banks. So I think that's why I call it development as opposed to innovation. Let's get the development blocks in place, and then we can move on to innovation. It's a little bit like running before you can walk, and I think that's the point you're making.
Right. Thank you very much, Ambassador Fahd. We're going to have to wrap up there now. We're out of time. I'd just like to say thank you to our panel for that fascinating debate. And if you'd all like to give our panelists a round of applause, thank you very much.